Hey guys, Notch Trading here, and today we're going to be going over a popular indicator known as the MACD uh, strategy and whatnot. So basically, as you can tell, whenever these two lines cross, which are based on EMAs, I'm pretty sure, it will indicate a bearish cycle and a reversal from bullish to bearish constantly. So as you'll see, we import the MACD strategy as well, and it tells us exactly where it's indicating these on the chart. As you can see, it appears to be profitable, and it does indeed say so. But let's take a closer look at the graph here. As you can see, it's mostly break even for a while. This goes all the way back to 2019, the beginning of 2019. So when I say a while, this is probably most of the year, and it looks like it actually even dives into a negative spiral for a good portion of time. Between 350 and 400 trades, it takes a significant drawdown. And then eventually, I believe this is probably March of 2020, where coronavirus volatility spikes and the market goes up. So if it weren't for that, I don't believe this would be showing very profitable. Now, of course, we're going to want to take a look on different charts as well, just to make sure. And as you can see here on this chart, it actually shows negative. And this is for a total of 758 trades. So, and it's 29% profitable with a 0.693 profit factor, which is below what you would like to see. It's negative. So as you can tell, you got a lot of trades, and it's not showing consistent profits. So there isn't an edge in this. It is a negative edge actually. So keep going with it, and as you see, we're on break even for GU on the 1 hour it shows, and then this negative edge comes in and takes away any of the profits we are seeing. So of course you can experiment on different time frames as well. Going out to the daily may influence it, but it does also change the time and the number of trades involved. So do be wary of that. For example, if I went down all the way to the 1 minute, there'd still be a lot of trades, but it only goes back to barely a couple days ago. So that is what you need to keep in mind when you're looking at the strategy tester. So as you can see, this might show it's profitable. It's taken over 500 trades, and it does include a profitability here. And so what we're going to be doing is further testing. This is not enough for us. This is preliminary testing, and then taking a look at the charts. So from what I could see on the UJ chart for the 1 hour, it seems like it does specifically very good at this period of time. Now, I wish I could see when that was. So that's actually like 550 trades, so I think we can see the numbers. So let's go all the way down to the 550th trade. See when exactly that is. So that appears to be, yes, right around March, where the volatility spike indicated in the market. So it seems like this did really well during that time. And we can go all the way back to March, and as you can see, this is what happened during March. As you can see, that the EMAs went crazy. You know, this just doesn't happen very often, so it's not really good indicator for filtering out any trades. So it doesn't look like we're going to be able to add any filter right off the bat. Based on any of this, it looks like it's merely break even for most of the market. So, and we'll be taking this over to a algorithm, and we'll be right back. Alright, so as you can see, I coded in a nice little thing here to test the strategy in MetaTrader. So what we'll do is go ahead and test it. So basically, as you'll see, we'll do it between the month of January, and let's get some data. So as you can see, it's taking sells whenever it crosses to bearish, and it will be taking buys whenever it crosses positive, and vice closing it out and taking other direction. So as you can see, for the month of January, it's showing positive, but that's not enough data. It's only a total of 14 trades in that time period, so that's definitely not enough data. So what we're going to want to do is we're also going to want to experiment with the time frame. So what we'll do, of course, less trades on the higher time frames. So we'll take this period and we'll change it. I don't want to include March of this year, so we're just going to do it through the year of 2019. See how that does. So end date would be January 1st, 2020. So okay, and now we can actually enable the optimization and see here what the best time frame for the strategy actually is according to it. And let's get some results, and we'll be right back. Alright, so the results are in, and so according to this, the time frame of the 30-minute was the best, and it took a total drawdown of 5.8% on our 100K account, and resulted in a profit of $1,876, roughly around 1%. So according to that, it took a drawdown of 5% and only a profit of 1%. So that wasn't really good. And as well as the other times frames, including 4 hour, 1 hour, were all negative, with the large total trades, and of course the lower time frames showing extremely negative results. So it appears that the 30-minute might have some potential, so we'll go test this on a different symbol, and we'll be right back. So we're gonna have to, we'll do the euros. Right back. Alright, so we're back to the results, and as you can see, we'll look for 30-minute, and that did not prove to be profitable on this one either. So as it turns out that this MACD strategy of bearish and bullish will conclude as not being profitable just as is. There needs to be filters in place, and maybe different take profit and stop loss levels to include. So we will make another video coming soon, and we might even do the divergence MACD strategy. I know a lot of you guys probably want to see that one. So we'll come back, we'll do the advanced analysis with including filters, what filters might make it more profitable, what take profit and stop losses might make it more profitable. And we'll come back and hopefully have a profitable MACD strategy. We'll see. And I'll see you in the next episode.